On behalf of all of us at SKP Securities, it is my great pleasure and privilege to welcome you to this financial results conference call with the leadership team at HEG Limited. We have with us Mr. Ravi Jhunjhunwala, Chairman, Managing Director and CEO of HEG Limited, along with his colleagues, Mr. Manish Gulati, Executive Director, Mr. Om Prakash Ajmera, Group CFO, Mr. Gulshan Kumar Sakuja, CFO. We shall have the opening remarks from Mr. Ravi Jhunjhunwala, followed by a questions and answer session. Over to you, Mr. Jhunjhunwala, for your opening remarks. Thank you.
Thank you. And good afternoon, friends, and welcome to our Q4 and full year 2019-20 Concall. Our results in this quarter, although lower than previous quarters, still remain one of the better ones in the industry. However, as you would have noticed, we had to take an abnormal hit on account of recognition of inventory at NRV in accordance with the applicable Ind AS accounting laws. This is typical of our industry, which has a very long production process cycle of anywhere between 6 to 24 weeks. And due to this, at any particular time, we would always carry substantially large stocks of WIP at different stages of processing. On top of this, our main raw material, needle coke, which is imported, adds another 6 to 8 weeks to the cycle due to the distance and some stocks that we have to keep. We enjoyed its resultant gains when we were carrying very low price inventory, WIP, and finished inventories and electrode prices kept going up at regular intervals a couple of years ago. And now it's just the opposite, so we have to pay for that. The current COVID-19 pandemic, other than being a huge threat for public health, has also pushed the world economy towards the worst ever slowdown, even worse than the Great Depression of 1930 and also the last one of the financial crisis in 2008-9. As per the latest IMF announcements, the global economy is projected to contract sharply to -3% in 2020, and it expects to grow by 5.8% in 2021 as some economic activity normalizes. We see more or less similar figures from different agencies, but at the end of the day, these are just the best guesstimates from different people, and only time will tell what's in store. Last year, the electric arc furnace steel production was down in some of the large steel producing regions like Europe, Japan, CIS, and Turkey, mainly resulting from slowdown in demand. Great tensions between US and China and all other geopolitical tensions in some parts of the world that all of us are witnessing. Now, due to COVID crisis, World Steel Association in its recent short-range outlook forecast for the current year 2020, the world steel demand is likely to contract by 6.4%, and the recovery in 2021 will be to the extent of about 3.8%. Since the past year, as you have witnessed, the electrode prices have been sequentially dropping quarter after quarter to reflect the market conditions, and many of our customers have reduced or suspended operations. Both of this has resulted in contracting the electrode demand. As you also know, given what happened to the electrode prices in 2017 and 18, the customers had substantially overbought electrodes till the first half of 2019, and we're obviously carrying this extra inventory. And with the current pandemic, this has further slowed down the rate of inventory destocking and fresh purchases. The needle coke availability has substantially eased, and accordingly, the prices of needle coke have also come down substantially. Due to our industry being a process industry, we were able to run part of our processes even when the first lockdown was announced on the 24th of March. In fact, we never closed down the plant completely, and we were lucky that we were only 40-45 minutes away from the main city of Bhopal. And within 4 to 5 hours of the lockdown being announced in the afternoon of the 24th March, we were able to mobilize about 150 workers and about 25 of our senior executives who stayed inside the premises for the next 30-35 days to keep running the plant and at least recoup all the in-process, work in process which is lying in the furnaces. By the end of April, the Madhya Pradesh government gave permissions to most of us to restart at about 50% of its operations. And these restrictions kept getting more and more eased from mid-May onwards, subject to following, obviously, the required precautions to deal with the COVID at the plant and the office premises. As you are aware, we've always been exporting about 2/3 of our production to more than 30 countries around the globe, and that helped us during this time to hold our ground. While we have seen the domestic market drop by about 50% in April and May, it is now set to improve with major steel companies increasing their production. What we also saw in May and June was that some of the large customers kept operating at between 80 to 90%, while many of the smaller customers more or less didn't start at all. So overall, we saw a drop of about 50-55% in the purchases of electrodes, at least in April and May. But now we are seeing an uptick as most of the other smaller companies have also started production, though at a smaller rate, whereas the large steel companies are surprisingly still operating at more than 75-80%. We see a gradual improvement both in domestic and export markets going forward for the next quarter. However, the situation in the international market was not as bad as India. And to that extent, since we export about 2/3 of our production, we were not as badly impacted as some of the other international players are. With our 4 decades of experience in business, we expect to be a supplier of choice to all our global and Indian customers. We have taken significant measures to manage our operations in this COVID-19 crisis and ensure the health and safety of our workers and team members. We have taken enough steps to contain our fixed cost. And as you have been following our company, you would have also noticed that in this particular product, the fixed cost doesn't amount to a very large amount. But given the current situation, obviously we have looked at each and every aspect of our cost, and we have been able to make substantial saving, which we believe is now going to be a permanent feature. We are not going to go back to the olden days in terms of our fixed cost. And as I said, the needle coke and other raw materials have come off substantially from what they used to be, let's say, about 12 months ago. So friends, with this, I would now hand over the floor to CFO Gulshan Sakhuja to take me through the financial numbers. And then I, along with my colleague Manish and Group CFO Mr. Ajmera, will be very happy to answer any queries that you may have. Thank you. Over to Manish and Gulshan.
Thank you, sir. Good afternoon. Yeah. During the year, the company's performance was affected due to lower volumes and realizations. Furthermore, the profitability declined mainly due to recognition of inventory at net realizable value as per Ind AS by rupees 427 crore in Q4 FY20 and rupees 459 crore in the year ended FY20. For the quarter ended 31st March 2020, HEG recorded a revenue from operations of rupees 374 crore as against 394 crore in the previous quarter and 1347 crores in the corresponding quarter of the last financial year. Further, revenue from operations of FY stood at rupees 2149 crores as against 6593 crores in FY19. EBITDA, including other income, stood at rupees 138 crore in FY20 versus 4767 crores of previous financial year. The company reported a net profit of 53 crore in FY20 as against profit of 3050 crore in FY19. Further, in light of the heightened concern on the spread of COVID-19 pandemic, Government of India announced a lockdown to contain the spread of disease. Thereafter, on announcement of lockdown, there was no operating business activity except in case of some specific processes which are of continuous in nature. These started again from 23rd of April 2020 but at a lower capacity. Presently, it is very early to assess the future impact of COVID-19 with reasonable certainty. However, the company is operating its business by optimum utilization of available financial resources and also implemented stringent cost control measures across the organization to conserve cash. The company is long-term debt-free and having a treasury size of nearly 1,250 crores, yielding an average return of approximately 7% per annum. Our working capital is in line with the historical cycle with customers paying us as per the terms. We continue to make payments to our vendors as per our obligations, and all payments were being paid on respective due dates, hence there is no liquidity concern. The company has not opted for the option provided by RBI of deferred payment of interest on working capital facilities. The company has adequate internal financial reporting and control system and also having a mechanism to continuously review and monitor its policies and procedures to adapt with a dynamic environment. We would now like to address any questions, queries, or you may have in your mind. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is from the industry perspective. What is the level of inventory of finished goods and needle coke that the industry is carrying currently?
So Manish, will you take it up? Yeah. Sure. I will take it up, sir. Sonali, did you mean what is the level of inventory of electrodes the steel companies have?
Yes. Yes.
Yeah.
And separately, needle coke as well with us. With us as in the graphite electrode companies from the industry.
Yeah. See, I can answer this question in a way that if you ask, first we'll exclude India out of this because in India, they've brought down their inventory levels. But globally, still people are caught with contracts with extra electrodes. So if, like earlier when you must have heard our competitors also, when they were saying that this inventory correction should have taken place by end of 2019, and then they pushed to H1 2020, and then that's when the COVID struck. And now we believe that more or less the inventory correction should take place by the end of this year, totally out of the system. And about your second question of how much needle coke we have, I mean, just because our product is such that we always have 2 months with us in the factory and 2 months on the way from high seas. But just because we had bought and committed extra needle coke last year, I think we can easily say that depending upon level of production, we are probably having around 6 to 7 months of needle coke inventory with us, and it is quite a similar situation with many companies. I will not say all, but many.
And from when did the prices of needle coke start coming off materially?
Coming up or going down?
Coming off, going down.
Oh yeah. See, I'll answer this in a simple manner. You see, it's a very theoretical question because not just us, all the other graphite manufacturers are holding such large stocks of needle coke. Because if you remember, just about 12 to 18 months ago, the needle coke availability was so poor that everybody was buying whatever was available at whatever price. Because the electrode prices were so high that nobody cared, and everybody was expecting the needle coke to be not available at any particular time. So everybody kept buying more and more and more, pushing the prices even higher. So to that extent, it's probably a similar situation with everybody, that everybody was caught unawares with the sudden drop and then whatever has happened in the world in the last 3-4 months. So each one of us is sitting with a fairly large inventory.
Sure. Since when did the needle coke cost start dropping off?
No, it started dropping off from February, March onward. But one thing which I forgot to mention to finish my description of coke, to the extent I said it's a theoretical question. I mean, nobody is buying. The prices have dropped a lot. But even at those very low prices, nobody is interested to buy any coke. I mean, given the stock position that everybody is carrying.
Understand, sir. So, and my second question is, you mentioned in your starting remarks that the electrode realization has been sequentially dropping off for the industry as a whole. So, where do you envisage the electrode realizations, kind of stabilizing around, at what levels?
See, again, this number will not give you anything because everybody is carrying such huge stocks of inventory. Somebody bought more coke at $4,000. Somebody bought a little less coke but at $5,000. And so it's such a big mix of different types of coke purchased at different times in the last 6 to 9 months. So I can understand what you're trying to get at, but the question is so difficult to answer that it's all a mix of everything. So probably an easier way to answer will be what is the spread on from the selling price to the needle coke price. Probably that's a much easier way to understand what you're asking for.
Sure.
Because if I give you the selling price of electrode today, you will not be able to make out anything because price may be X, but your needle coke cost in some cases may be more than that X price of needle coke of selling price. In some cases it may be similar, in some cases it may be lower.
Got it. So, sir, any ballpark, number that you would like to share where you think the spreads could normalize or stabilize?
See, I can only tell you that having taken the hit on account of the NRV accounting, obviously whatever stock of coke we had at a higher price versus whatever is the currently available price of needle coke, we've taken that entire hit in one go in January-March quarter. So going forward, the margins and the spread and everything has to only improve. Whatever be the electrode price, that margin has to only improve. It cannot deteriorate compared to what we have gone through in the last quarter. Especially with the timing of the COVID and the demand for going down further and people not being able to produce more electrode and things like that.
Understand. Sir, my next question is, what was our capacity utilization in Q4 FY20 and for FY20 as a whole? And what is the current utilization that we are working at amidst COVID?
Yeah, I'll take this question. For the Q4, if you look production-wise, it was in 50s, but we sold more than that. So sales-wise, it was in mid-60s for Q4, and for whole of the year, it was lower 60s, both by capacity-wise and sales-wise. It was in 60s.
Sure. And amidst COVID right now, in the resumption status, what is the current capacity utilization that we are looking, say, on an average in May and mid of June?
See, currently, if we talk about the quarter, because this quarter was kind of imbalanced because we had a lockdown and then We started the full plant around 23rd of April, and then there's a process time also. So just look, if you look at April, May, June put together, it's 50%. It's close to 50%.
Sure. So my next question is, which are our key current geographies and any key risks particular to any countries that we are witnessing right now?
Sonali, we are very well diversified as far as customer base is concerned. We are fortunate to have done that in the past for many, many years. So we are quite evenly placed between India and the Middle East and the Southeast Asian countries and Europe and Turkey. So we are not as heavily dependent on 1, 2, or 3 countries. And as you know, these geopolitical things keep changing all the time. I mean, if we just put the country count, it's around 30 plus countries where we export. And region-wise, it's quite evenly between all the 5 continents. So we're not endangered by any trade barrier or anything coming from one-off country per se.
Sure. So my last question, any comments or updates on your capex front of 20,000 metric tons?
The capex plan is very much there. It's very much on. However, there are bound to be some delays because of this COVID, which we are assessing. A lot of equipment had to come from overseas, and a lot of things had to be procured locally also. So the plan is very much on, but there might be delays.
Got it, sir. So our date of commissioning, our estimated date of commissioning is the first quarter of 2022?
Yes, that's correct. That is what we had originally given. That's right.
That was the original. No, but that was the original.
That was the original date.
It always said January, March 22 should be the time when we will come out with the new production from that expansion. But given the situation where most of the suppliers are not able to work, we have more than 30, 40 very major suppliers from different parts of the world. So even 1 or 2 of them getting delayed by 3 months or 6 months will impact the entire thing.
Understand, sir. And what would be our estimated outgo towards this capex?
It was 1,000 crores actually. About 1,000. It was 1,000 crores.
1,000 crores. Got it. All right. Thank you so much, sir, for this. And
Thank you.
Thank you.
Thanks.
Thank you. Participants who wish to ask a question, please press star and 1 on your touchtone telephone. The next question is from the line of Sandeep M from HEG. Please go ahead.
Yeah, good afternoon. Can you hear me?
Yeah, we can hear you. Go ahead.
Yeah, I just have a question that the chairman sir told that steel demand is likely to go down by 6.5%. And he said that the electrode prices are also dropping down in last 1 or 1.5 years. So whether that trend still continues or you expect the electrode prices to stabilize or something like that?
See, as I just said, I mean, we think that probably the worst is over. What we have seen in terms of pricing and sales in April, May, June, we only see an upside from July onwards.
Okay. So given the issue that your main raw material prices are also going down, so that would be a better thing for the company.
Yeah, but again, to again clarify, I mean, we still are carrying large stocks of finished products and needle coke, as Gulshan just explained, which is typical of this industry or any industry, which is a very long process time. So that impact will continue for at least 2 more quarters.
Okay, thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Akhil Jilani from Kamal Charan Securities. Please go ahead.
Hi. You mentioned, sir, that you were using this 1,000 crores for expansion. Wanted to just understand how much of that 1,000 crores is already been used, and what is the deployment charge for the same?
See, we have already spent about 200 to 250 crores. Obviously, a lot of actual construction activities had already begun end of last year, middle of last year. So some money has gone into that, and as I said, a very large part of this 1,000 crores is against imported equipment. So several letter of credits have been established. Advances have been paid to international suppliers. So in total, it is in that region of 200 to 250 crores.
And is there any plan for backward integration in terms of setting up a needle coke plant in future or something like that, which is a part of this 1,000 crore expansion unit?
No, that is not. It is simply a 20,000 tons expansion of electrode.
Yeah.
And as far as the backward integration is concerned, it's very, very difficult because this technology is extremely complicated. This technology has been in the hands of 3 or 4 international companies. And that scenario hasn't changed for the last 50, 70 years.
Right. Okay. That's it. Thank you.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hi, sir. Just wanted to know where are we in terms of spreads, gross spreads? So, electrode prices minus the raw materials based on current prices. So, I'm not talking about the inventory that you carry historically. Just based on, are we near to that 2015-16 lows, or we are better than that, or low, even lower?
No, we are certainly better. Certainly better than if you are comparing with 15-16.
Okay. How much, sir? If you can give some, quantified, slightly better, or maybe far better.
Somewhat better.
Okay, that helps, sir. And sir, secondly, what is the price differential between UHP and HP today? Have the spreads between both these products came off?
See, I will let me take this question. See, the ultra high power grade uses this needle coke, which has a completely different pricing, and the HP grade uses the Indian coke, which has a completely different pricing. Although the cost of conversion would be the same, but you start with a completely different raw material price base. So it will be difficult to compare the two spreads, but normally speaking, the HP always remains under more pressure because of Chinese competition, because Chinese are not as much of a competition in UHP, but HP they are. So historically also speaking, the HP prices are more under pressure compared to the UHP pricing.
Okay, thank you, sir. That was helpful.
Thank you.
Thank you. A reminder to participants to ask questions, please press star and 1. The next question is from the line of Chandramouli Srinivasan, who is an individual analyst. One moment.
Good afternoon, sir.
Good afternoon.
How is the competitive intensity from China?
Srinivasan, sorry to interrupt, but we can't clearly hear you. Request you to use the handset.
Yeah, hello?
Yeah, but go ahead.
Yeah. So how is the competitive intensity now on the pricing front from China? Because in between there was a lot of selling at low prices by China is what we had heard.
You see, as Manish just explained, China, we compete with China only on that non-ultra high power. And if my memory serves me right, I mean, that's about 1/3 of our total production, about 35 to 40%. So we do compete with China on that 30-35% kind of non-UHP. On the major part, which is the UHP, and which is where we are exporting more than 2/3 of our product. Okay. We don't compete with China.
Okay. Okay, thank you very much.
Thank you. The next question is from the line of Anuj Sharma from MP Investments. Please go ahead.
Yeah, thank you for this opportunity. Actually, I joined in the call late, so I don't know if this question has been answered, but is there a positive contribution between incremental revenue and incremental cost of raw material today?
Gulshan, will you take this?
Yeah. Yeah, there is a incremental contribution to that, because already we have taken a hit on our inventory that is sitting on our books on 31st March 2020.
Okay. So the new material which comes into our factory and the new realization which you see, there's a positive contribution, and does it absorb the fixed cost as well?
Yeah, definitely it would absorb the fixed cost as well, because we have already taken a major hit in our books of accounts in last year.
Okay. And what is the broad range of realizations which you are looking at the UHT market?
That is a difficult question to answer actually, because you see it's a basket actually. So there are some old businesses, old contracts still continuing, new ones getting filled. So it's today's price, if you say, is a very difficult question to answer. What is the price realization? So in every quarter there's a mix of some carryover contracts, some new orders being booked. And I wouldn't like to mention a particular price because of competitive reasons.
Sure. And in terms of needle coke pricing, how is the pricing behaving? That's my last question. Again, I don't know if this has been answered, but how is the cost of raw material behaving? You think in terms of our booking, the high cost inventory is completely over and we are realizing the new cost, or that will again take some more time for us to realize?
You see, I had answered this question exactly about 5 minutes ago. See, this is a very typical kind of an industry where our process time is very long. I mean, once we get the raw material, the easiest product takes about 6 to 8 weeks to produce, while some of the difficult ones take as much as 5 to 6 months. So given this long production cycle, at any particular time, we do have to carry a lot of inventory, whether it was lower cost coke or a higher price coke. So that is going to be there in any case at any time. And in addition to that, because our main raw material is imported, so obviously one has to keep a margin of 2 months in terms of carrying stock, which one would not normally carry if it was an Indian stock.
Okay.
So that's number one. Secondly, talking about the needle coke price, the needle coke price has also come down pretty substantially in the last 3-4 months. But again, given the scenario where everyone, not just us, practically every graphite supplier in the world, is also sitting with very large stocks of needle coke, because in last 2-3 years, needle coke was in such a short supply that everybody bought whatever was available to him to buy. So everybody is carrying a large stock. But again, as Gulshan just explained, having taken the hit on the NRV, so we've taken all that into account while giving the results for the whole year. So going forward, we expect that probably the worst is over, and the margins and everything should hopefully improve. The markets are also improving. Indian market was more or less down by about 50% in April and May, which is now increasing. It has probably gone up to about 60-65%. International market was down by about 15-20%, so it was much better than the Indian market. And to that extent, because we have been exporting about 2/3 of our production, so that obviously helped. So our overall production and sales for this quarter is in the region of about 50-55%.
All right, thank you. I'll come back for next questions. Thank you so much.
Thank you. The next question is from the line of Ms. Manish Kayal from Nippon India. Please go ahead.
Thank you. Thank you very much for the opportunity. Sir, I have two questions. First is related to your competitor. So a couple of months ago, Graphtec mentioned in its PPT that some of their customers are renegotiating the past contracts which are made at very high prices. So is there any benefit that would accrue to us? Because as you mentioned earlier that there are only 3-4 players who do UHP product. So any color on that? And second is related to scrappage policy. So I'm not sure when the scrappage policy would be announced, but whenever it's announced in India, what would be the opportunity for graphite electrodes player, and whether it's for the UHP, HP, or any other category of HP which would benefit. So if you can give some color on that opportunity, volume-wise, realization, margins, so that would be very helpful, sir. Thank you.
Yeah. I'll take up the first one. Manish will answer the second one probably. You see, on the first one, if I take you back into history, about 3-4 years ago, when the electrode prices had suddenly shot up to very abnormal levels, Graphtec, being the only company out of the 5 or 6 that we are in the world, who has the whole needle coke backing with them. I mean, they have more or less 75 to 80% of their own coke. That is the only company which has backward integration into coke.
Right.
And major raw material for producing the needle coke is a very high quality of oil. And in US, as you know, you can hedge your oil, you can book your oil for the next 5 to 7 years if you want. So when they came out with this policy and they went around committing for 5 years, so they had a policy of 5 years take or pay kind of contract at a fixed price. So they had this luxury that because they had their own needle coke and they hedged their oil, their raw material for the next 5 years at a particular price. So given that they more or less fixed their margins because their needle coke cost was fixed for 5 years, which was not the case for anybody else in the graphite industry except themselves. So what you just mentioned is happening to them because their contracts for 5 years are still due for the next 18 months. I think 3.5 years have passed out of 5 years.
Okay.
Up till December of 21, they are fully booked at a take-or-pay contract.
Okay.
So their margins are obviously much better than anybody else. They are still able to sell at about $10,000 against those take-or-pay contracts. So what you mentioned is probably what you probably meant was a lot of the customers who had booked for 5 years at $9,000-$10,000. So some of them are trying to renegotiate with them because the electrode prices have dropped substantially below $10,000.
Okay, and whenever that comes for renegotiation, do we have a chance to get in front of those clients or?
No, there is no renegotiation. You see, in America, when you have a take or pay kind of a contract for 5 years, I mean, you have to buy X quantity at a Y price, which is pre-decided for 5 years. But now that the electrode prices have dropped much below $10,000, so those customers are renegotiating with Graphtec to get a cheaper price compared to $10,000, which is probably being discussed between the customer and the supplier, but we would not know what is happening. But so obviously they are looking at maybe $500,000, $2,000. So it is up to Graphtec to accept or not accept. So we are not affected by that. We are not in that in any case.
Okay.
Yeah. And about your second question about scrappage policy, see, this is running delayed by at least 2-3 years now. So once it comes, it's certainly be helpful to the electric arc furnace production in the country. Because you see, if you look at America, they all use shredded cars and, the nobody uses DRI in steel making. So this is when the scrap policy finally comes, there'll be a lot of scrap which will be available in-house because India is still a net importer of scrap. So once they have the EF's way of steel production will be more viable in India once they actually give the go ahead for this policy.
Okay. Thank you very much.
See, what Manish is trying to say is about 30% of India's total steel is produced through the electric arc furnace where electrodes are used, while the international average is about 50%. If you look at the total steel production of the world minus China, close to 50% of the steel is produced through the electric arc furnace where the electrodes are used. And in India, that number is 30%. One of the reasons is scrap, non-availability of enough scrap.
Right. Okay, sir. Thanks.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Ajay Mehta, who's an individual investor. Please go ahead.
Yeah, good afternoon, sir. The query is basically on the quarter results which you have given. In December 2019, we have shown that the cost of material consumed has been about 260 crores. The same potentially, if we go forward, March 2020, it is showing cost of material consumed is 468 crores. Can you please
Yeah, because the portion when you take that. Yeah.
Yeah, this is on account of NRV hit that we have taken in the last financial year.
Sorry?
This is on account of inventory recognition at net realizable value. That we did.
Okay. The one you were talking about, that 200 crores which you have taken as the hit. So that is reflecting in this particular. That's good. Fair enough.
If you see our results, it is clearly mentioned in the note number 7 of the result. That clearly means solve your that query.
Fine. That answers my query in a big way. Coming back, the second query is about what is the break-even sales? You know, as a shareholder, you would like to know that you have been performing very well and you have rewarded the shareholders for the last 2 years, and we are thankful for that. But going forward, we just would like to know what is the break-even sales or which you would achieve so that there is no loss in the company. For example, in the December 2020, probably because of the NRV, we are showing a 400 crores loss. But going forward, can you please quantify what would be the break-even sales which will let us know that there will be no loss in the company going forward?
If you see, break-even is the factor where my contribution and fixed cost both are equal. And contribution is again the factor of my selling price and my coke price. Now, due to this COVID situation that is going on, it is very difficult to comment and that where this selling price would go in future. So right now, it's not possible to give you this break-even point as on date. Because it is a factor of only two things, my contribution and fixed cost, and my contribution is a factor of my selling price and that coke price. So currently it's not that feasible to provide this number to you.
So maybe if you could highlight on your fixed cost, we could walk backwards and check on what.
It's a very difficult question to answer because. It's purely a matter of cost of needle coke. Needle coke accounts for more than 50% of our total cost, including fixed cost and everything. And needle coke went up by 5 to 6 times in the last 3 years. So did the electrode prices go up. So that spread, as the electrode prices went up by 5-6 times, the needle coke prices went up by 5 to 6 times. So the differential margin was much larger in case of graphite because in the worst days, the electrode prices had dropped to something like $2,000, and the needle coke prices had dropped to something like $500. So that spread, the pool
Sorry. Yeah. Please continue.
We seem to have lost the line from Mr. Jhunjhunwala.
It's not audible. It's not. I think it's disconnected.
Yes, please stay connected while we reconnect. We have the line from Mr. Jhunjhunwala reconnected. Over to you.
Yeah. So the needle coke, I was talking about the spread that in electrode, rather than talking about the margins at what price and this and that, it's more important to understand the differential between the electrode selling price and needle coke price. So in the worst scenario, in the worst case about 3-4 years ago, the needle coke prices were about $500 and electrode prices were like $2,000, so giving a spread of $1,500. And in the best case scenario, 2 years later, the electrode prices went up to $14,000-15,000, and the needle coke prices went up to like $4,500. So that spread of $1,500 suddenly went up to about $10,000 to $11,000. So, and needle coke is let's say practically 50-55% of our total cost. Okay. So giving a number that at X price we are breaking even. It's not very easy, and probably you probably joined the discussion later. Here is an industry where the process time is very, very long. Once we put the needle coke into operation, it takes anywhere between 2 months to 5 to 6 months to process those electrodes. So given a very long production cycle, whatever coke we purchased at $500 and maybe sold at $10,000, you carry it for like 4 to 6 months.
Okay.
So that huge inventory profit came to us 2-3 years ago, and now we have to pay for that. I mean, our inventory is all very high price coke, whereas the electrode prices have dropped.
Fine. I get the broad idea of the whole thing. Coming back, last 2 years, we've been doing very well. Why is still a loan figure coming in our balance sheet? Is there any particular reason? Or, though we have reduced our loan, but why have we not totally loan-free, sir?
No. Actually, there is actually no loan. The loan is because we still do get a cheaper interest loan because of exports. We export 2/3 of our production.
True.
So there's an arbitrage on that loan.
Okay. So the interest cost which is there is basically the arbitrage cost or probably the differential.
Right.
Okay. That's nice. Thank you, sir. Thank you so much.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Next question is from Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you again. Sir, just wanted your thoughts on this industry. Now, for a very long time before 2016, approximately 10 to 12 years ago, for a duration of 10 to 12 years, this industry was pretty much flat, ranging from, flat profits in a bit cyclical. We had 3 exceptional years, 2016, 17, 18. Just when you think out, you think the industry will go back to the decade of, slight volatility, or you think the exceptional years of the last 2-3 years can be repeated? How do you think through this scenario, going forward?
Shall I answer this?
Yeah, I'm just.
Hello?
Yeah, I'm listening to you, sir.
Yeah, these are the 2 years you were referring to are the very exceptional years. It's a once-in-a-lifetime event which happened suddenly.
course, we don't expect that we will go back to those kind of levels. But if you look at historical data, this is an industry which has had healthy EBITDAs from most of the years, for majority of the years, except that there were like 4 or 5 dips in between if you consider the last 30-year history of this industry. So what happened in the last 2 years is very difficult to replicate. But the industry should return to healthy EBITDA levels.
Okay. Do you think anything has changed in the last, in the last few years, which can have very different dynamics or economics than, the past decade of 2006 to 16? Any fundamental change in the business, competitors, or the way economy or the business has evolved?
Not really. I mean, yeah. You see, 2 things I'll tell you. What happened about 3 years ago, which increased the prices from maybe $2,000 to $10,000, $12,000, $14,000, was very simple. That China decided that they will close down about 130 million tons of steel making, which was all through the blast furnace. As you know, 50% of the steel in the world is produced through the blast furnace, and the other 50% is through the electric arc furnace, where electrodes are used. And it's a very well documented information that for every ton of steel that you produce through the blast furnace route, you are polluting the atmosphere about 3 times compared to electric arc furnace. So China decided 3-4 years ago that they need to take care of the environment, and China was producing 95% of their steel through the blast furnace, whereas the rest of the world was only producing 50% through the blast furnace. So they decided to stop 150 million tons, and that suddenly meant that China, which was exporting about 120 million tons of steel all over the world, having stopped 150 million tons of capacity, so their capacity to dump steel all over the world went down substantially. So from 120 million tons in the last 3-4 years, China has now settled at about 60 million tons. That 60 million tons of dumping of steel which stopped from China 3-4 years ago meant that the other part of the world, which was everybody minus China, had to produce about 60 million tons of additional steel, which was coming from China up till that time. And that changed the picture of this industry, because suddenly 30-35 million tons of additional electric arc furnace steel started getting produced, which needed electrodes.
Right.
And going back from 10,010 to 10,015-16, because the market was not improving for the steel industry all over the world, at least 200,000 tons of electrode capacity were shut down, mostly in Europe and US. So somebody had to close down the capacity to bring some sanity in the business in terms of demand and supply. So while on the one side, 200,000 tons of capacity went down by closure of 6 to 7 plants, and suddenly this thing which I just explained about China added. So there was suddenly a mismatch between demand and supply. So which changed the total dynamics. And in the last 6 months, I mean, I'm only talking from public information. If you read the scripts of the conference call and the public presentation that some other companies have made, they have already closed down 2 plants. One plant has been closed down in Germany. Another plant has been closed down in Austria in the last 6 to 9 months.
Okay.
So that has also brought down the capacity in the last 6 months or so. Now it only depends upon how the world is going to change over the next 12 months. Whether it will take 6 months for the normal world economy to come back to the normal levels, or months or 12 months, that is anybody's guess. But some capacities have shut down in the last 6 months, To that extent, the electrode capacity has come down.
Okay.
So once we get back to the normal situation which we saw about a year or 2 years ago, probably things should look up.
Okay. And sir, my last question is this net reduction in capacity, or there were new plants which also came up, so net there is no capacity reduction?
No.
There's a net capacity.
So this is net because there has been no new greenfield graphite plant which was established. We started production in 1977, and 1977 was only one small plant which started, a new plant started in Malaysia about 15 years ago. In the last 10 to 15 years, there has been no new plant at all.
Okay. And what is the net capacity reduction in terms of percentage, or if it is in terms of tons also, that will be helpful?
No,
the two shutdowns?
Between 2013 and 2016,
right,
about 200,000 tons of capacity went out of circulation.
Right.
And in the last 6 months, about 50 to 55,000 tons of further closures have happened.
Great, sir. Thank you so much for this. Thank you.
Thank you. The next question is from the line of Ritwik Sheth from One Up Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. Just one clarification from an earlier question. You mentioned that peak spread 2 years ago was around $10,000 to $11,000 per ton at EBITDA level for us, which is usually $1,000 to $1,500 per ton. Did I get this figure right?
Yeah. See, you're comparing the spread. What Chairman said was one of the worst years. That is the lowest it had gone, and this is the best it went 2 years back. So this is just the range which he was mentioning. Of course, that $1,500 spread is not good enough at all, because those were one of the bad years for the company. So, but since the earlier question was asking was what was the lowest it went, so that is what the Chairman answered actually.
So that was the lowest,
but that is not the sustainable level of EBITDA. $1,500 was not sustainable anyway. That is what made so many plants in the world close down actually.
Right. So what would be the current spread if I take spot price for graphite electrodes and spot price for needle coke currently? If you can highlight that.
It's much, all we can, without giving any numbers, it is much higher than, it's much higher than $1,500.
Much higher than $1,500. Hello?
Yeah, much higher than $1,500. If we were to compare it with our today's cost of purchase versus today's cost of sale.
Right. Okay, fine. And so just one, what would be the peak prices for needle coke and graphite electrodes, and what would be the prices today, if you could just highlight that?
So, you see, I would not like to give any numbers for today, because obviously we don't want to let others know about it. But the older numbers we have been speaking for the last 1 hour. The highest electrode price was about $14,000, $15,000, $16,000.
Right.
And the highest needle coke price was in the range of $4,000 to $4,500.
$4,000 to $4,500. Okay, sure. Okay, that's very helpful. Thank you and all the best.
Thank you. The next question is from the line of Chandramali Srinivasan, who's an individual analyst.
Yeah. So you very beautifully gave us the example of the comparison between the electrode price and needle coke price, say $2,500 and in the peak $16,000 and $4,500 or $5,000. So I wanted to know what is that difference today, roughly. But I think you probably the same question was asked before me, but you didn't give an exact number. You said it's substantially better. But and I know that you said that you're not buying needle coke at today's price because we have inventory, but since you have probably brought all that inventory down to today's buying price of needle coke, so going forward in your cost, you should be able to see the lower cost. Therefore, what's that difference in between the electrode price and needle coke price? That was my question.
Yeah, you're right. You're absolutely right. I mean, that is what I said. I mean, going forward, that's exactly what I said, that probably the worst is over, as we have taken a fairly large hit on the stocks.
Yeah. Okay. Thank you.
Thank you very much. That was the last question in queue.
Thank you. Manish, will you take up? Hello, Manish.
Yeah. Yes, sir.
Yeah. Just make a closing remark.
Yeah. So thank you very much for listening to our Q4 con call, and we hope to speak to you again with our Q1 results, and hopefully with better set of numbers. Thank you so much.